Hey, Mark. Thanks for joining us today at Finley HQ. Super excited to chat about the world of venture and structured finance and just hear about your story and why you founded Clear Haven. Quick intro on Mark. Mark is a seasoned investor with finance background and experience from places like Bank of America and Macquarie. And we're lucky to have him today to chat about Clear Haven and the platform they're building to support startups. Mark, I'd love to hear about your background and how you ended up in the seat you're in today.
Thanks for having me on. Always excited to talk about everything specialty finance and structured finance. Yeah, personally came out of school in 2006, a couple of crises ago, and was immediately interested in structured finance and spent basically my whole career at Macquarie, which I joined in 2008. Helped stand up the specialty finance business there, and then ultimately in 2019, struck off to try and, change the way that early stage specialty finance companies can approach their balance sheets and make things a little bit more efficient. That's really what we've been focused on for the last 4 years, is building out the infrastructure at our firm to be able to just make life more efficient on the capital market side for early stage companies.
I love it. Was there any one biggest lesson or gap in the market you identified while you were at Macquarie?
Yeah, it was really a shock. Before we were in specialty finance and in private credit, we were trading, and life is just fast in trading. Things happen in minutes and hours. When we were building out this business, it was really surprising how long everything took, how expensive everything was for our borrowers and just internally too. That really struck home and immediately was something we wanted to work on and try and get better at. It was always a problem in the market that early to mid-stage companies would have to go through the same process that a late-stage company would have to go through to get what is functionally 1/10 of the capital, or even less, right, when they're just getting going. That was really the gap in the market that we felt really needed some attention, because it was so perilous for young companies to end up in a 6 or a 9-month process that might cost them $500,000 or more, when they were just not prepared for that kind of thing to happen to them.
Yeah, that makes sense. Would love to hear more about Clear Haven then, the kind of investment philosophy or what parts of the process don't work for these earlier stage companies.
So Clear Haven itself, we're a credit fund. We're active across structured products. So we have a liquid side of the business, then we have our private credit side of the business. That's the right way to approach this. We're trying to be a reliable capital partner, and you got to have the long-term committed capital on our end that we need to then pass through to our companies. Now, as far as kind of our investment philosophy, it's a bit of a mix, right? We have to be credit investors, right? We've got to be, stewards of capital, but we also have kind of alternative mission to be a better counterparty, a more efficient counterparty, and a bit of a service provider to our companies. So it's kind of that dual mission. And these are very symbiotic missions, where by being effective at executing on these facilities, by being efficient with our counterparties, we hope that we can put them into better positions to succeed. And then that feeds around to just being a quality, kind of investor from that standpoint. You're helping your company succeed. I'd also say that part of our investment thesis and kind of the way we're building ourselves as a company is to stay focused on specialty finance specifically. Nice. Right? Try not to stray from that. And really the hope there is that allows us to build a lot of muscle memory, work with a lot of companies that do similar things, like many charge card companies, many consumer finance companies. And by doing that, we'll get more efficient, we'll get more knowledgeable, we'll be able to be a better counterparty for them, push things farther potentially than other people might be willing to push things, because we understand where the comfort zones are. We've just done it more times. That's kind of our approach to try and get really good at at one thing, and hopefully everyone benefits from that.
I love that. How have you seen the market kind of validate this approach, specifically within specialty finance, which maybe you can elaborate on what falls within that as well?
Yeah. It's just a really positive overall response from our companies, from the VCs that we've interacted with. We take feedback really seriously, and getting a good amount of positive feedback whenever we're able to close a transaction. I mean, we understand how much these things can cost and how long these can take. Every single transaction, we're in it to close it in 4 weeks or less is kind of the goal. And our platforms, hopefully they never hopefully they never experience what it's like to be in a process for 6 months.
Yeah. When you think about this sweet spot for Clear Haven, would love to hear, how are you deciding what companies are worth supporting?
We want to be very broad within the specialty finance vertical. So again, we do take it kind of seriously that part of our role is to be a service provider. In terms of just kind of initial cuts, we want to have an initial conversation with anyone that's launching a product. Right? We'll start pre-launch. Right? We understand the need to have line of sight to your capital. It's usually you only need 3-4 million at a minimum to do that. That's really the initial filter. And then we'd love to talk. We'll talk to everyone. We feel like everyone we should have at least an initial conversation with. And then if their product is something that's financeable and something that we can work with, which is in most cases the case, then great. Let's figure out a structure that works.
Yeah, one thing that I'm personally really excited by is the Finley-Clear Haven partnership, where we're kind of locking arms and providing some of the tooling support for some of these early platforms to get up and off the ground from a capital market standpoint.
Well, first off, what you all do is incredible for companies that are just getting started. Starting a lending business is really hard. It's very operationally intensive. And for us to be able to work with earlier stage companies, it's very clear to us that we need to build out relationships with people like you that can help these companies figure these things out. Right? And reporting, just even tracking your own collateral is hard sometimes. It's a challenge. There's a lot of different ways to do it. And having someone like you guys come in and help standardize that, and then help them manage the various reporting requirements that allow us to interact and lend to these companies, really important and very difficult. Service providers like you all, critical to supporting the space and helping just bringing down the barriers and helping companies be like excellent operators out of the gates.
When you think about your portfolio, any common traits that the best teams share in common?
Man, credit's hard, right? It's constantly changing and you just constantly have to assume you're wrong, right? You're always looking for how you're wrong because you have your competitor. It's not a static business. You're not just out there and you're influenced by, XYZ company is now offering a slightly different product or is really pushing up your CAC. I'd say that those are the most successful founders that we see are the ones that understand that like you've never got it right. You always have to be adapting.
How do you think the credit game or credit investing game will continue to change over the next 5 years?
That's a great question. How is it going to change? I hope that we're driving a little bit of it. So from a credit investing side, right? So from like people like us, not necessarily the originator side, our hope is that capital markets doesn't necessarily become more, it's not necessarily more commoditized, but it becomes more transparent. So that's, for people that are looking to start a business, I would hope that would be one of the major developments. It becomes a lot more predictable, how to go out and source balance sheet to be able to launch products. VC capital is kind of pulling back from, specialty finance businesses. And so we're going through a little bit of uncertainty, but still one of the largest markets in any economy. And so hopefully we still see a lot of innovation over the next 5 years.
Yeah. Any lessons you would pass on to aspiring founders of future, fintechs or especially finance shops?
I don't know. Am I qualified? Man, if it was anything, I'd say that it's definitely the stuff that we kind of take to heart is that, try and do hard things. And the harder the task, be reasonable, right? Do possible things, but make sure it's hard. And if it's hard and you stick with it, that's in our view, that's your greatest likelihood of success. Like perseverance on something like that is going to set you apart. And you pick something like you do that and you stick with it and you're smart about how you go about it, then that's about as good a start as you can have.
Well, thanks for coming on and hanging out today, Mark. Anything else you'd like to share about Clear Haven or just, words to the wise?
For any platforms watching this, don't hesitate to reach out. We'll speak to anyone at any stage. Even if you've only got $500,000 in the bank and you're just getting started, we're still happy to talk and give you thoughts and help where we can.
Perfect. Thanks for joining us, Mark. And Thanks everyone for tuning in.